Improving your credit score is one of the most important steps you can take towards securing better financial opportunities. Whether you're planning to buy a home, get a new car, or simply lower your interest rates, a higher credit score can make a significant difference. In this video, we're going to dive into actionable steps that can help you boost your credit score in just 3 months. So, if you're ready to take control of your financial future, let's get started. What is a credit score? Before we jump into how to improve your credit score, let's quickly cover what it actually is. A credit score is a numerical representation of your creditworthiness. It's calculated based on your credit history and helps lenders assess how likely you are to repay your debts. The score typically ranges from 300 to 850, with higher scores indicating better creditworthiness. There are 5 main factors that contribute to your credit score. Payment history, 35%. Your record of paying back borrowed money. Credit utilization, 30%. The amount of your available credit that you're currently using. Length of credit history, 15%. How long you've been using credit. New credit, 10%. The number of recently opened accounts and inquiries. Credit mix, 10%. The variety of credit accounts you have. How long does it take to improve your credit score? Improving your credit score doesn't happen overnight, but it's possible to see significant progress in as little as 3 months if you follow the right steps. Keep in mind that improving your score will require consistent effort, but with the right strategies, you can make a noticeable difference within this short time frame. Step 1. Check your credit report for errors. The first thing you need to do when you're looking to improve your credit score is to check your credit report for errors. A large portion of your score is based on your payment history and credit utilization, so any mistakes could drag down your score. Errors can include incorrect personal information, accounts you don't recognize, late payments that were made on time, or accounts that should have been closed but still appear as active. How to do it? You're entitled to 1 free credit report from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion, every year through annualcreditreport.com. Look through your credit reports carefully and flag any errors. If you find any discrepancies, file a dispute with the credit bureau. Correcting these mistakes can give your credit score an instant boost. Step 2. Pay your bills on time. One of the most crucial factors influencing your credit score is your payment history. Late payments can cause a significant drop in your score and remain on your credit report for up to 7 years. To improve your score in 3 months, it's essential to pay all of your bills on time. This includes credit cards, loans, utility bills, and any other monthly payments. How to do it? Set up automatic payments for your credit cards and loans to ensure you never miss a due date. If you're not able to make the full payment, try to pay at least the minimum to avoid late fees and penalties. Set up reminders or use a budgeting app to keep track of when payments are due. Step 3. Pay down your credit card balances. Credit utilization plays a huge role in your credit score. It's the ratio of how much you owe compared to your credit limit. For example, if you have a $5,000 credit limit and you're carrying a $20,500 balance, your credit utilization is 50%. Ideally, you want to keep your credit utilization under 30%, and if possible, even lower. How to do it? Focus on paying down high-interest credit card debt first. Try to pay more than the minimum payment, especially on cards with higher balances. If possible, pay off the full balance each month to avoid interest charges. Avoid making new purchases on credit cards while you're working to pay down debt. Step 4. Request a credit limit increase. If you're able to pay down some of your credit card balances and your credit utilization remains low, consider asking your credit card issuers for a credit limit increase. This can lower your overall credit utilization, which can have a positive impact on your credit score. How to do it? Contact your credit card issuers and request an increase in your credit limit. If you've had the card for a while and have a solid payment history, the issuer may be willing to increase your limit. Keep in mind that some credit card companies may perform a hard inquiry on your credit report, which can temporarily lower your score. But if you manage your credit well, the long-term benefit of a lower utilization rate can outweigh the temporary drop. Step 5. Avoid opening new credit accounts. Each time you apply for new credit, a hard inquiry is made on your credit report. While a single inquiry may not significantly affect your credit score, multiple inquiries in a short period can. Opening new credit accounts can also lower your average credit age, which accounts for 15% of your credit score. How to do it? Resist the temptation to open new credit accounts, especially when you're trying to improve your score in a short time frame. If you do need to apply for new credit, do it strategically. For example, if you're planning to apply for a mortgage or car loan soon, you may want to wait until after those applications are completed. Step 6. Settle any delinquent accounts. If you have any accounts in collections, now is the time to address them. Accounts in collections can have a severe impact on your credit score, but paying them off can help improve your score over time. While paying off a collection account won't immediately remove it from your credit report, it will show that you've made an effort to settle your debts. How to do it? Contact the collection agency to discuss a payment plan or a settlement offer. If possible, negotiate a pay-for-delete agreement where the collection agency agrees to remove the account from your credit report once it's paid off. If you can't afford to pay off the entire balance, negotiate for a lower settlement amount. Step 7. Use a credit builder loan. If you're looking to establish or rebuild your credit, consider applying for a credit builder loan. These are small loans offered by some banks and credit unions that are specifically designed to help you build or improve your credit score. The loan amount is usually held in a savings account, and you make regular payments until the loan is paid off. How to do it? Check with your local bank or credit union to see if they offer credit builder loans. Make sure to make timely payments to the loan to help build positive credit history. Improving your credit score in just 3 months is totally achievable, but it takes focus and commitment. By checking your credit report for errors, paying your bills on time, reducing credit card balances, and avoiding new credit applications, you can see significant improvements. Remember, building a better credit score is a marathon, not a sprint. But with these actionable steps, you'll be well on your way to a healthier financial future. Don't forget, everyone's credit situation is different, so what works for one person might not work for another. However, by following these tips and staying consistent, you should be able to see noticeable improvements in your credit score in just a few months. Thanks for watching. If you found this video helpful, make sure to give it a thumbs up and subscribe for more tips on managing your finances. God bless, and take control of your credit today.